The deposit growth of HDFC Bank in Q1 FY24 quarter-on-quarter was on the lower side in comparison to peers. Let's take a look whether this is a worrisome factor or not. In Q1 FY24, HDFC Bank's deposit grew by only 1.6% quarter-on-quarter when compared to about 4.9% on a quarter-on-quarter basis for ICICIBank and about 6.4% quarter-on-quarter for Kotak Mahindra Bank. Axis Bank witnessed decline in its deposit by about 0.6% quarter-on-quarter. On a year-on-year basis, the growth rates look very strong, especially for Kotak Mahindra Bank at more than 22%. So, is this a bad growth rate, something to be worried about for HDFC Bank? Absolutely no. Here's the catch. Now, lenders saw a jump in deposit growth only in Q1 FY24 at a time when the interest rates on deposits were either on the peak or on the higher side in last few years. What did HDFC Bank do? Over the last 4 quarters, HDFC Bank focused mainly on deposit mobilization. HDFC Bank mobilized about rupees 3.54 lakh crore in deposits in last 4 quarters. Its growth rate on deposits averaging anywhere between 19% YOY to about 21% YOY. This compares to a gain of about 1,16,000 crore by ICICIBank in the same period, with growth rate moving from 10% to 13.5% to as high as close to 18% in Q1 FY24. Around rupees 1.2 lakh crore has been mobilized by Axis Bank, and its growth rate moving from 10% to 15% to right now about 17.2% in Q1 FY24. And rupees 51,400 crores have been garnered by Kotak Mahindra Bank, where the deposit growth has been constantly improving from around 10.5% in Q1 FY23 to about 22% in Q1 FY24. Now, the low-cost deposits have increased by 54 basis points in last 5 quarters for Axis Bank, thanks to the merger of Citi's retail business in India with the bank in March 2023. HDFC Bank has lost only 330 basis points in CASA ratio when compared to 541 basis point decline for ICICI Bank and about 1,140 basis point decline for Kotak Mahindra Bank. The decline in low-cost deposits to impact the cost of funds for the banking sector. So, what's in the deposit growth rate of HDFC Bank? Now, HDFC Bank didn't have any adverse impact on net interest margin in Q1 FY24 results. It was able to keep its net interest margin steady quarter-on-quarter in Q1 FY24. This compares to 12 to 18 basis point decline in net interest margin that you saw for other private peers. Cost of funds will start hurting the margin of the banks going ahead, but HDFC Bank has been steady as a rock with respect to its net interest margin. Next quarter, HDFC Bank will report merged number of HDFC Limited with itself. Hence, this comparison may not hold good in the near term. But for now, HDFC Bank has been able to hold on to its net interest margin along with healthy deposit growth over the last few quarters, while others faced pressure on cost of funds massively in Q1 FY24 due to raising liabilities when the price was high.